Good morning all, hope you're doing well. Quasidb morning bulletin for Wednesday the 19th of October 2022. Risk calculation is on at the 24-hour change, is that they really shorted indices on average. We're not out the woods yet, though we do need to bear that in mind. We're still risk off at the big picture. If we have a big move like this tomorrow, then by Friday we'll be risk on at the big picture, and then the retail guys will be trapped. So that'd be great. And then we can see some nice moves, because right now it's chopping because it wants to trap the dumb money. And so that's how it works. So VIX is above 30, so that's a little bit of concern. Ideally, we want it below 26.5. But there's lots of reasons for this to be spiking. You know, this geopolitical stuff going on, Fed policy, and all that news as well. Maybe China, Taiwan, Russia, Ukraine. So yeah, we're not out of the woods yet, but potentially we might be out of the woods by Friday. And do note the yields, they spiked as well, and this has been a concurrent theme for a while. And if the yield spike, it does support a stronger USD and a risk-off theme. Okay, they're very, very high. The 10-year is now above 4%. Okay, so that would support a stronger dollar yen, right? But we've got the trouble with the yen is that we've got the BOJ intervention, and they tried apparently, and it failed. So we're dealing with like a bit of a broken market where a central bank intervenes, but it gets ignored. So that's pretty unheard of. So we're dealing with strange dynamics, and it might be to do with like the sentiment and the apes, maybe. Where dollar yen had to dip down in order to flush the people out. But if they didn't get flushed out, then it's going to resume higher. So conventionally speaking, people, they should be using stops, but I don't think they are. Or their stops are so wide that they wouldn't have got probed by like a 200 pip move. Their stops was like 1,000 pips away. So it could be sentiment related, and that's the reason for the dollar yen being really erratic. And we're taking the stops above. I just posted in Discord, and we need to examine the size after the probe. If it gets larger, then simply they move their stops higher. So dollar yen is worth watching today. I am going to be watching that, and maybe I might trade it. I think I might just watch it, to be honest with you. If anything, we should be buying because of the sentiment. And but the trouble has got the BOJ 12 and the 2-year, so we might have a inversion, and so if we do, then that's fairly risk off. So the 6-month is yielding more than the 5-year, the 10-year and the 30-year. So the short dated yields are pumping, so it tells us risk off near term from a yield perspective. So that's a bit of a mismatch to what we're seeing on the sentiment, on the retail sentiment. So this is what I was saying about the retail sentiment, that they've shorted the indices, and pound yen and euro yen and Aussie yen. They've gone long on oil. Okay, so that's worth noting. So perhaps we'll be risk on today, but we'll have to maybe wait for the risk out to flip to risk on at the big picture, and then then we'll know that they're fully trapped, and then we can rally. So the trouble about the risk on is that the dollar is, showing signs of strength near term. So on the day, we rallied a little bit on the dollar over Asia, and so this populates, in real time. So when I did this, it was like an hour ago. So it might have changed since. Well, it will have changed since. And so I don't know if we want to be fighting the big picture. The dollar, because the yields have spiked, and you could probably argue this is probably more powerful than retail sentiment, but we do know that this has been highly accurate for a few years now. We've been examining it, so it's a bit of a mismatch there. So be careful with the dollar. I'm glad that our trade of the day isn't dollar related, because I was watching yesterday's trade of the day, and it was such a roller coaster. It was fairly stressful, to be honest with you. And it's a long day just watching it as well. So today's trade of the day isn't related to the dollar, and that's good. And probably avoid it, maybe, because it looks like we might be trying to recoup some losses here, and it might get slapped down again. and you could argue maybe profit taking. They've made a big yield, their profits on the Kiwi USD, for example. That's a nice return. So dollar yen is the leader and dollar CAD is the laggard. So that's just crazy. The fact that BIJ intervened apparently in speech marks and we just rallied anyway. So I think it's probably to do with sentiment and big fish sentiment as well, because they want to be doing the opposite of the small fish. Okay, so it might not be like a policy move. It could be sentiment move, and that's why we just rebounded. Like it completely ignored their intervention completely. So keeping an eye on the sentiment, I think. That's fine. If you want to subscribe, then there's the bulletin tier. So if you want to see the trade of the day, you just go to patreon.com, Quasidb, and then click join on the bulletin tier, and you get access to the trade of the day, and plus FX, indices, and crypto analysis as well. So it's a pretty good deal, and that's that. So I mean, it's quite affordable. That's like 2 coffees, or maybe like 2 beers or something. So yeah, so there's the technical support in the S&P, and I think we might potentially want to come down to the arrow, and it'll be like the last flush, and if this falling will encourage them to short. So that's what we have to deal with. We have to look at it like a contrarian way, where if it falls, it should encourage the sentiment to also go in decline. If it goes in decline, then it's a trap. Okay, and if it goes up, then it will fall. So this is like an illusion. This is probably bogus in order just to push this sentiment a little bit further down, and then we'll bounce. And we've got this support here on this wick. So this would be okay as long as they don't go long. Okay, if you're long, you don't want them to go long. Okay, you want them to short if you're long. And so we have flipped below 50%, so it's a buy. Okay, do note that. Likewise, we've flipped below 50% on Dow Jones, and this is them shorting it. They sold it, then they went long, we fell, and then they shorted it. So this here is probably bogus. However, it could be falling just to encourage them to short a little bit more, to induce more positions in order to short, and it'll be more of a trap. So I'm going to do a quick 2-minute video because we've got the London Open now, and we're going to cover this in more detail in the private feed. DAX, we don't want them to be going long, and there's some technical levels there. It's got an inverted head and shoulders and an SR flip, support resistance. So that was on the right shoulder, and up we came. Technically it was okay. It just tied in with the fact that they sold it as well. So that was like fortunate coincidence there. And so we did rally a lot based on the technical and sentiment. Gold, now it was a sell at the big picture, and they've gone long, so we saw that break, and that's it. That's it in a nutshell. You don't really need to talk about that. It's just if it already is like a buy or a sell, and they add to that position, it's more of a buy and it's more of a sell. So you're looking for confirmations over time. That's it. And this would be a confirmation over time on the S&P here if it comes down. You want the sentiment to come down in order for the price to go up. That's the confirmation over time. Time is the key. And today's liquidity targets, dollar Swiss is a large stop loss cluster at 99.10. Pound USD is undecided, and we have taken out stops above on UJ. We'll have to examine the size afterwards. If it's got drastically smaller, then it tells us that the apes are getting liquidated, and that's brilliant. We don't want them in the casino because they're skewing everything. And hopefully they just, they leave the casino and don't come back. And they probably will. That's the trouble. They're going to be quite stubborn, but hopefully they just leave the casino because they've skewed dollar yen, and we shouldn't have rallied like we've rallied because of the sentiment, I think. So yeah, be careful with that. Failure rate, that's worse than 50%, so it tells us on the majority they're getting paid, so it's not good. We want that to be higher in order to know that the sentiment is working. End to end about 70%-ish, and then you know that the trap's been in place, and yeah, so it's a bit of a casino right now. Wait for that to get a bit higher, then you can enter, knowing that the trap mechanic has been activated. So yeah, yen is currently paying the retail guys on their bias, and Swiss as well. And Monday they got paid a lot. Tuesday they got punished, and then Wednesday they're getting paid currently. But that's obviously subject to change, and this will change as we evolve through the day. That would get higher because the retail guys shouldn't be getting paid; they should be getting punished on a majority. So that's a good thing to keep an eye on. On the spreadsheet, you come to IFX book failure rate. Right, there you go. So because we went to London Open, it's ensnared a couple of, well, not a couple, but quite a lot of retail guys. Now we've gone flip back to them getting paid. So the trap's still being activated there. Where are we? Yeah. So yeah, it's flip-flopping a lot, and it did flip-flop this week. So we're probably going to see more churn and indecision. Kiwi USD resulted in a 6-pip loss after an incredibly volatile London New York session. I was basically did a 13-hour day yesterday, just watching the trade of the day. I was really keen on its success because I want to publish positive results, and I'm quite happy today's trade of the day isn't to do with the dollar, because we don't really want to be trading the dollar. Ideally, you want to be trading something that's not so extreme. And we are coming off extremes, as you can see on the technical check. So neutral. So that would explain a lot of the chart. We were a strong sell on EU and GU, and now we're to buy. So it's tricky right now. The sentiment did tell us that we're veering away, and it was suggesting buy like last week. So we want the technical and the sentiment to agree, ideally. Economic calendar, CPI out. We've got double-digit inflation from the UK, but probably not really a surprise. CPI from Canada, so be careful with CAD. And we've got housing data from the US. So keep calm, always trade safely. I do mean that as well. Don't feel like you have to use like large sizes or even like medium sizes. Just use like small sizes, and then the volatility is so great, you won't need to do normal sizes, because if things are moving twice as much as normal, you can reduce your trading size, do a lot size by half because of the volatility. So you're trading normally in speech marks, but you're just reducing your risk because of the volatility. The volatility is twice as great. So consider using small sizes because of the volatility, and keep calm. And if you do find yourself getting angry and frustrated, just take a break. Remember, you've got to put your stop in. And if you get stopped out, don't worry about it. You just move on. And then that's it. That's trading. If you get agitated from being stopped out, you'll get frustrated, and then it's all those negative energies. And you've got to try and keep positive. And let me know if I can help you as well. And we've got a good community in Discord. So if you've got questions, you can ask in there, or you can ask me personally as well. So have a good day, and I'll speak to you guys soon.